All right, here we go. Oh, nice recovery. Oh my God. He just pulled everything. Everything. Ooh. Ooh, I hope nobody peed there. Oh. Yeah, oh my God. Ooh. Wow, he farted. Got him. Oh, Granny. Got him. Oh. Oh. Too much. Oh my word. Got him. Ooh, you poor thing. Yeah, you already know. Got not the milk. Okay, that's not funny. She fell in the hole. What is she doing? Oh, you deserve that. He just played it off. My man. All right, everybody. Welcome to the Blacksmith Podcast. We are going to get started. I appreciate everybody for being here. Remember, it is our Saturdays. It is our financially savvy Saturdays. Um, and so we got a bunch of financial topics to do. If you see right here on the live, I started titling these. Boxable updates is going to be today's. Sorry, give me 1 second, folks. I meant to invite everybody because it's a party. Remember, remember YouTube and every other platform you might see this on later. I started the community I wanted to see. And we've been helping it grow because the community's been inviting everybody and it's just been fun. And so every Saturday I like to do a mass invite. I just usually do it before I start the show, but you're seeing it now. All right, that's enough. We gotta get the show started. Okay, so the first thing we are going to cover, I've got to show you guys a little something that one of my brothers, developed for me for the show. And I like to call it Forge the Blade. And so here it is. Hold on. Can I go half C's on the screen? No, I can't. You will do it and you will like it. All right, hold on. Here we go. So that guy right there is the back of my t-shirt. So that's the back of my t-shirt. And one of my brothers is a master with AI. So he actually animated a guy, made a move. He actually created me an entire song for the podcast, and that is a part of the song. So he just keeps hammering the sword that he's making, and they just keep saying "Forge the Blade." But we are really moving production along over here at the Blacksmith Podcast, or Blacksmith Enterprises is what it's going to go to. Looking at creating a whole nonprofit organization, but I will keep the shush on that until it's actually up and running. But we are building that plane, and it's also flying. So was he tower? Never mind. Is that chat? What are we doing? Was he tower? I don't know what that's supposed to say. All right, so let's get him off of the screen. I turned around. I don't get it. All right, so let's get this back up. All right, let's make sure y'all can see this. Health tip of the week. All right, so Here we go. We talked about the whole brisk walk um, last week, but kick off the week by setting an intention to move more and sit less. Now, why health tip of the week? I thought this was a financial show because health is wealth, folks. Health is wealth. And if you don't have your health, but you have wealth, when you are older, you are going to wish you had your health and you would trade your wealth for your health. Bars, financial bars. Actually, one time I went to 24-hour fitness, and there was this older guy who got out of this gray Corvette, and I saw him. He had an oxygen tank, so I went and worked out a little bit, and I got on the treadmill to run, and I got on next to him because I just wanted to actually talk to him. And so I asked him, I said, hey, I told him, nice car. I saw you drive that Corvette out there. And he said, yeah. And I said, well, what are you doing? He told me what he did, something financial, and he owned businesses and stuff like that. And he said, but I tell you, man, I would give it all up for my health. And I said, oh, yeah? He said, yeah, man, look at me. I got this damn oxygen. That's his words. I'm quoting him. I got this damn oxygen tank, and, I'm trying to walk on the treadmill. I've never been fit, but, my lungs started going to crap. I'm going to clean up what he said. I can't say everything he said. It just came out. But he said my lungs started going to crap out of nowhere, all this black stuff, and they don't know what it is. And yeah, I'm rich, but yeah, my health is, I traded off for my health back. So he said, always remember that. And he said he was like early 50s. So he had a couple years on me, probably at that time, almost 15, maybe 20. And so I will tell you, health is definitely wealth. And he's not the only person I've talked to. There's an 85-year-old guy named Mike I see at the gym every Saturday. And during the week, I see him. There's Robert. He's 75. I see him at the gym Monday through Friday. I actually saw him today too. He's there every morning. These guys get to the gym every morning and they always have some kind of wisdom to drop. So this intention to move more, sit less. These guys are 75 and 85 years old. There's another guy named John. He's 83, 6'1", stands up straight. He's always doing chest flies and bench press and stuff like that. He talks a lot, but he also gets to the gym and works out. So where there's a will, there's a way. Hello, my name is Will. And where some people are doing, some people have excuses. So health tip of the week. That's why. Now let's get to it. Move more, sit less. So this right here, sitting in this chair, will probably be the longest I am going to sit today. I have a lot of stuff to do, so I will not remain sedentary. Now, my career is sedentary. Air traffic control, especially if I'm in radar, you're sitting in front of a scope and you're watching your aircraft targets and moving them all over the screen to get them where they're going. But when you're in the tower, you can sit, but usually when I'm working local and I'm looking out the windows and I'm clearing people for takeoff and landing on the runways, I'm standing up. But it's not physical. So my job is mostly sedentary and there's not a whole lot of movement. So you want to move is what they're saying. Prolonged sitting increase the risk of heart disease and diabetes. Break it up by standing up, stretching, or taking a brisk 10-minute walk once every hour. Can't do that with what I do. But if you can and you have the ability, do that. And not only that, can you do push-ups? I'm going to add to this. Add 5 push-ups. When you do your brisk walk, add 5 push-ups every hour. Add 10 push-ups every hour. If you work 8 hours a day, you should be at 80 push-ups by the end of the day. Can you do squats? Add 5, 10 squats. You don't have to add 30 or 50 and start sweating profusely at work. But if you did that, look, you're also adding some fitness to your day. I was talking to a guy this morning at the gym, and he was saying he knows a guy who has the excuse of he doesn't have time to work out, and he told him, "BS, you do have time to work out. How long do you sit on the couch every day?" And he said, "Oh, a couple hours." And he said, "And there's your time to work out." And I said, "Right, but it's a mentality. The guy comes home from 8 to 10 hours of work and he's probably tired. So as soon as he sits down, his body goes into rest mode. Two things about that, folks, that we must remember. If that's what you do, you come home so tired that you sit down and you just rest the rest of the night, but it's 3 to 5 hours, then bring you a gym bag with you to work, go straight to the gym, work out, and then come home, make sure you shower first, and then you sit down and you rest the rest of the night. Or else you will never get up from the couch once you sit down. Try something different. Don't say, yeah, but if you always do the same thing, you're always going to get the same result. And if you are always doing the same thing, expecting a different result, Einstein, the late and great, calls you insane. He said that is insanity. All right, so let's get through the rest of this because we got a lot of topics to cover. So hydrate first. Start your morning with a glass of water to support your metabolism and stay alerted. All right. Desk. Sorry, that's work. Desk stretches. Stand up every hour and stretch your neck, shoulders to improve posture and release tension. So when I'm sitting here, I'm actually sitting up. Like if y'all see me do this, I probably won't do it for long because I always remind my dad and mom were hyper fixated on making sure we always sat up straight. So I may do this. Sitting back in the chair, though, my spine is actually up. My chest is usually out. And that's how I walk, too. My back is normally in a bit, and I normally walk like that. So remind yourself of correct posture. And then weekend meal prep. Use easy, easy. Weekend meal prep. I'm gonna get to your comments in a second. Weekend meal prep uses weekends downtime to chop vegetables, roast proteins. Notice it said roast, not fry, and all that back fat and lard. Setting yourself up for easy, healthy meals this week. And if you're like, oh, but the meals will be all old and stuff, then what you can do is tomorrow, not today, tomorrow meal prep till Wednesday. So Monday, Tuesday, Wednesday. And then Wednesday, make time to meal prep your Thursday and Friday. And then they'll be fresh than they were. Bars, financial bars. All right, that's health tip of the week. Let me get to the chat before we. Okay, you're a nutball. Where is my soundboard? This guy.
Very nice words, but happens to be wrong.
He said he thought I was going to shake some. Something's wrong with you, dude. We need an intervention. Somebody, where's Sanchez? Somebody get Sanchez on the line. She's normally here. First of all, we need to check on her. And then, yeah, she's not here. And then we need to contact Brothers Anonymous. This guy's on the loose. All right, so let's do a financial react. Remember, when this gets uploaded to YouTube, I have chapters broken down. I always have chapters now. Humphrey, that is not a good look on your face, good sir.
There are 3 money milestones that change everything, and the first is 100K in investments. This is when compounding gets very powerful, so if you save 10K per year and you get a 7% return, it will take you 7.84 years to hit your first 100K, but the next 100K, it only takes 5.1 years with compounding. You're not completely set for life, but at the 100K milestone, it genuinely does get a lot easier. The next financial milestone is when your investments can out-earn your salary. This is pretty big psychologically because technically technically now your portfolio can theoretically replace your income without you doing anything. So, for example, if your salary is $60,000 a year, you would need around $750,000 invested to replace that income given a rate of return of 8%. While this milestone is quite nice, it doesn't mean you can withdraw 60K a year, but it does change a lot about how you think about money. The third milestone is the number when you can quit your job right now and just retire immediately. So this is different from milestone 2 because what you can withdraw on a yearly basis is vastly different than what you can make from your investments. The sum needed to withdraw can be calculated using the 25x rule. That means you want to take your annual expenses, multiply them by 25, and that is the number that you need to retire. If you're retiring young, perhaps a multiple of 30 or 35x your annual expenses is more fitting. Now, most people will never hit all three, but if you want to increase the likelihood that you do, make sure to follow me here.
All right, so there's a lot of meat on that bone. I need a different analogy. So y'all help me out. But there's a lot to that video. Remember, we watch it one time all the way through, and then I'm gonna stop it. Okay, so here we go.
There are 3 money milestones that change everything, and the first is 100K in investments. This is when compounding gets very powerful. So if you save 10K per year and you get a 7% return, it will take you 7.84 years to hit your first 100K, but the next 100K, it only takes 5.1 years with compounding. You're not completely set for life, but at the 100K milestone, it genuinely does get a lot easier. The next financial milestone.
All right, let's stop right there. So what he's saying is it takes 7.8, 7 point something years to get to 100K. Get to 100K. That's number one. Get to 100K because the compounding is easier. Watch this. Like so let's take Orchid Island Capital that gets you about 20% return a year. If you can get to, let's watch this, at $10,000, where's my calculator? Bring up the calc. Y'all can see this, right? Yep. All right, so the calculator, that's 10,000. So if you divide that by 0.2, that's 2,000. So Orchid Island Capital will return you 2,000 a year if you have $10,000 there, right? So at the end of that, you'll have 12,000. Now let's watch this with 100,000. 100, I already know it, but I'm going to show it. So 100,000 times 0.2 now is 20,000 plus 100 grand gives you 120K. See, the compounding is more. So he is right. So if this is in your IRA and your IRA is getting 7 to 12% a year because it's mostly invested in SPY, the S&P 500, right? The top 500 market cap companies in the world. He is right. It's going to compound faster. So this is how, two sayings I will use here. This is how the rich get richer. It's really the wealthy get wealthier, but everybody conflates rich and wealthy, but that's what the saying is really talking about. And then the second saying is that it takes money to make money. And that right there, I just showed you. 100 grand earns more money than $10,000. So if you add more zeros, you will add more zeros. The blacksmith. All right. So moving on to number 2.
Is when your investments can out-earn your salary. This is pretty big psychologically because technically now your portfolio can theoretically replace your income without you doing anything. So for example, if your salary is $60,000 a year, you would need around $750,000 invested to replace that income given a rate of return of 8%. While this milestone is quite nice, it doesn't mean you can withdraw 60K a year, but it does change a lot about how you think about money. The third.
All right, let's stop it right there. So he said the second is when your investments can out earn your salary. He is exactly right. So he said you need about 750,000. So $750,000 at about 8% return a year to replace that, right? That's a nice metric that I guarantee you most people won't hit. Most people can get up to 100 grand in their IRA. It's just they're very lazy at giving money to their IRA, 3%, 2%. So it takes them forever to the end of their careers to get to 100 grand. And then they really have nothing to retire on. So they have to keep working. So most people can get to 100 grand, I bet you. But I bet most people will never get to 750,000. I'm not at 750,000. I'm almost 18 years in the Navy. But I will get there. It's just for me, with what I earn a month, it's not replacing my income, out earning my income anytime soon. It would have to replace 6 figures. And I'm not there yet. I would love to be there, but if you really think about it, this one is nice, but most people will never hit the matrix. Just don't be a lazy investor. Put your IRA at 20, 25% if you can afford it, and rework your budget from that if you can. Especially if you are young and single. Put your IRA at 20 to 25% and learn to live off of the rest. That means you have to be disciplined and consistent in that discipline. If you can do that, you will outpace me. You will outpace most people in this Discord and most people alive today. If you can set it up like that, because what everybody does is they look at their paycheck, they live off the whole paycheck, and if there's anything left, they'll invest. And this is why most people are in debt. Number 3.
Third milestone is the number when you can quit your job right now and just retire immediately. So this is different from milestone 2 because what you can withdraw on a yearly basis is vastly different than what you can make from your investments. The sum needed to withdraw can be calculated using the 25x rule. That means you want to take your annual expenses, multiply them by 25, and that is the number that you need to retire. If you're retiring young, perhaps a multiple of 30 or 35x your annual expenses is more fitting. Now, most people will never hit all 3, but if you want to increase the likelihood that you do, make sure to follow me here.
All right, so on that one, and y'all put in the comments in the chat real quick, if really quickly, I hate saying real quick, it's so grammatically incorrect, but I do it all the time. It's like the difference in saying Pacific versus specific. Put in the chat, did you know this rule of 25 or this rule of 30, 35? So I didn't know this. I did not know this, that you take your expenses and multiply it by 25. So I just connected my phone to the computer. So if you're hearing all these lovely dings and bings and beeps, that was my wife texting me and saying, did I know it was Memorial Day weekend and I'm off Monday, Tuesday? Joke's on her. I was off Friday and I'll be off Monday. I have to work Tuesday. But anyway, so yes. So I didn't know the rule of 25. If you're seeing this on YouTube, go ahead and comment on that. Anything you saw on any one of the 3. But I didn't know this rule of 25. Now, he said if you're going to retire late or earlier, maybe 30 or 35. And that's because if you're going to, this car alarm. Okay, they turned it off right when I was about to close the windows. So if you're going to retire earlier, you do want to do 30 or 35. And that's because 1, inflation, and 2, you're going to be living off of that money for longer. So you probably want more money in there. So you want to shoot higher as opposed to lower. So that's our first financial react. Now let's take a look at market movers. We are going to get to that. Yes, it is time. Market movers. We are going to look at Nokia. And, you know, we've got the audience out here, and some of these folks might want to mic up and speak on this. Now, Nokia is currently trading at, now this came from YInvest. Y'all can see him here in the chat. Let me see if I can see what y'all are seeing. Yes, I can. Put the camera back on me. And my increasing forehead. So I never knew this, but once you hit about 34, 35, your forehead grows and it continues. Never knew that. No one told me that. Daddy didn't tell me. Grandpa didn't tell me, but it is what it is. So Nokia is currently trading at $15.45. It went up about 9% yesterday. And the past week, it's up almost 12. Past month, good God almighty, 49%, almost 50%. It has been on a tear, an absolute scare. 100%, it's doubled in the past 3 months. Year to date, it's, why haven't I invested? Why invest? Why haven't I invested? In the past year, almost 200%. 5 years, over 200%. Now, we won't do max. Now, y'all know it used to be up there. Now, watch this, though. It's been green the entire 5 years, right? Don't let the max chart fool you. Remember, if you go down here, you can figure this out. So, Nokia was founded in 1865. 1865. Bet y'all didn't know that. I didn't know that. There's no way. I thought it was going to be 19-something, 1865. So you're dealing with a company that has been around, 150 years? 160 years? 161 this year, maybe? All right, calculator, do your thing. Yeah, 161. All right, so don't let the max fool you because look, way back here in 2020, it was at its peak at $57. Now, what do you know about 2020? Well, COVID hit. And then obviously it's not going to be charted back to 1865. But COVID, this is 2000. I'm sorry. So this is 2000. Now, what do you know about 2000? I was actually going to talk about this because this is when I actually started paying attention. This is probably 2020. No, 2020 is way over here. Okay. Ooh, God. Oh, I forgot. My screen can move over. So I was going to talk about this era because I was in high school in 2000. I was a freshman. I graduated. I was out the door in 04. So in 2000, Nokia was at its peak, as you can see. But in 2000, remember, there were a lot more phone carriers. Now, if you are a millennial, especially an elder millennial, you'll probably remember this. Now, if you are a younger millennial, like one of my brothers that is right underneath my name, you probably don't remember this. But you used to have Nokia. There used to be a Nextel with the business. They were made for businessmen and women. The chirp button, where you could just put somebody's number, chirp, and say something like a walkie-talkie, and they could chirp back. The most annoying phone in history. But you used to have Nokia, Nextel, Singular Wireless, raising the bar. You had AT&T. You had T-Mobile. Who also went out? There were more. There were more phone companies is my point. Verizon was still around, but there was more than just Singular and Nextel. Blackberry, I guess. Well, they're a manufacturer. I don't know if they. Yeah, I think they're a service provider too. But there were a few more that got phased out around this time. And so Nokia had more competition, I guess is what I'm saying, right? And there was less. So you had to innovate and you had to buy and invest in towers, which is what Verizon was doing and what AT&T were doing. So there was a lot more competition back here. And as you see, it had a steep drop off. And around 04, when I graduated, Nextel was at its peak. AT&T, remember, they had the Sidekick phones that You turn it, you could talk on it like this, uh, or you could turn it sideways and it had a keyboard that would flip up and you can text on it. Um, you had the Verizon had the Voyager. Well, that Voyager came around later. What else? You had the Razor phone. It was razor thin. T-Mobile had it, then Singular had it. They kept stealing each other's ideas. It's no different than like the Honda Civic. The Corolla will look like that. The Honda Civic will get a good design, or the Corolla will get a good design, and then you'll notice the Civic will look like that, and all these, they all like copy each other, right? Whatever's working for one, the next one wants to do it, right? So Nokia had a precipitous fall. And then when you look at around 2007, it was peaked again. What happened here, folks? The housing market crashed because there was a stock market crash, and it was just a recession and everything crashed. So a lot of people lost their homes around this time. So of course they don't have cell phone money if they don't have money to live somewhere. That's not true. Homeless people have smartphones. So, but you get what I'm saying. There was a precipitous fall here in 2007, 8, 9. They were trying to give housing credits if you bought a house in 2009 for the end of the year, all kinds of things to get people to buy homes again. But the point is T-Mobile is back. And why is T-Mobile back? If you've been looking at the right side of the screen the whole time, you can see exactly why I asked, or what AI is saying why they're back. But our very own Y Invest has talked about it, and he said it is due to NVIDIA's investment into Nokia. Now, I am chatty. I talk a lot, but you can only talk and say all of this stuff if you know a lot. I know a little about a lot. All right. Sanchez is here now, sucker. Burn that up. Y'all can play around with the numbers on this for an investment. Change the formula. Oh, is this the 100 grand? This is for ORC at 20%. All right, I'm gonna open this in a little bit. Just when I go to switch topics, I'll open this before we get to Boxabl. And remember, chat, if you have anything on Boxabl that you want to share, go ahead and throw it in here and I'll pull it up. Just kind of how you did on ORC. Okay, so let me hold on. Work is chatting me up about some stuff that's going on the watch floor. Yeah. Okay, where was I? So, all right. Nokia's massive growth, surging over 110% year to date in 2026. Is that correct? Yeah, 130. It's driven by complete reinvention of its business. So first, they said complete reinvention. What is that called? Renovation. So they had to change some stuff because what they were doing was not working, right? The company has shed its legacy reputation as a fallen smartphone giant and emerged as a powerhouse in the artificial intelligence infrastructure and data center sectors. Data centers are sucking up a lot of market share. CoreWeave is, I think, one of those companies. I had it and I sold it. I made some money off of it and I sold it. But I'll probably get CoreWeave back and I'll keep it. CoreWeave is one of those companies that IPO'd recently in the last like 2 years and hasn't fallen below its IPO. Maybe at one point it did. I don't think it ever did, actually. But CoreWeave is still up. But anyway, data centers. Wall Street has fundamentally re-rated the company, driving its stock to its highest level since 2015. This explosive turnaround is anchored by several critical catalysts, and we're going to look at them now. The critical AI optics bottleneck and data center pivot. So let's see, as tech giants, hyperscalers, yada, yada, transfer speeds, bottleneck, okay. The Infernia acquisition. Nokia's 2024 acquisition of the optical networking leader, Infernia, Infineria, I can do this, sound it out. Infinera, there we go, began paying off massively by 2026. Explosive sales. Q1 2026, Nokia sales to AI and cloud clients skyrocketed by 49% year over year as optical network business jumped 20%. All right, so what you'll notice is that what they're saying Nokia did was they moved out of cell phones. They moved out of cell phones, which was their bread and butter at one point in time, and they moved into AI and data centers. How did they do it? The first way they did it was acquiring a company that was already doing it and doing it big. So that's one thing. That's one reason Microsoft has been able to stabilize and continue to. That's why they're in the Mag 7. That's why Microsoft has been able to innovate better, probably over the decades, than a lot of companies. I would almost dare say any other company out there, is because they realized, okay, we started as a technology company, right? We made software, right? But I will say we started as a tech company that specialized in software. Now, how are we going to move into hardware? Well, we can create a hardware division, or we can look at this company that already makes hardware and acquire them. Let's buy this guy's company from him, and we'll keep him on and make him like the CEO or head of that department, or the CEO of his company. He'll remain that within our company. So what they started doing was they were acquiring companies that, okay, how do we get into telecommunications? Well, there's this thing called FiOS, fiber optics. You know what? There's already a company doing it and doing it very well, and they already have a boss. Let's acquire that. Microsoft will now be an umbrella. We're going to acquire all these different guys and all these different sectors that specialize in this, and we'll keep them being mini CEOs of their departments or of their sectors or their divisions in our overarching umbrella company. And that's Microsoft, right? A lot of businesses started doing that. In fact, we talk about Robinhood a lot, right? Robinhood being the MVP of TBP's portfolio. Robinhood acquired Bitstamp around July, August timeframe last year. Bitstamp being the oldest cryptocurrency, platform out there. A lot of companies started going to that model because of Microsoft. Thank you. Nokia is doing that too. So that's what this is talking about, right? Number two, NVIDIA, the king-making effect. So one of the largest stamps of approval came from NVIDIA. Last year, NVIDIA made a massive strategic move by investing roughly $1 billion for a 3% stake in Nokia. Now, 3%, remember, we just saw a 1 billion number up here for right here. And this is the pound. So this is British or European. I'm pretty sure that's the pounds sign. But anyway, I could be wrong. But just think of it as dollars. I don't care. $1 billion. Let's do the math. I got the calculator pulled. So we just need enough zeros. 100,000, 10,000, 100,000, 1 million, 10 million, 100 million, 1 billion. Times 0.03 equals 100,000, 10,000, 100,000, million, 30 million. I'll take it. Me, please. Me? Don't work that way? All right. So a 3% stake in Nokia could be as much as 30 million. Well, just looking at 1 billion. Recent 13F filing shows NVIDIA holds over 166 million Clear. Okay. Shares of Nokia worth roughly 1.3 billion. So here's one thing about NVIDIA. NVIDIA took the Microsoft approach And NVIDIA is quickly acquiring stuff too. In fact, NVIDIA was very intelligent. Microsoft did this too, but I think at a smaller scale. NVIDIA did this whole circular economy thing, right? So if you look that up, the circular economy around NVIDIA, so NVIDIA is a chip maker, right? NVIDIA also makes GPUs, game processing units. Now American Tire Depot is calling me about my Highlander. So people buy from them, they buy from people, and they circulate the money in an economy sort of approach. And that's what I'm getting at, right? So sorry, let me ask my wife to call the shop about the Highlander. During the show, I can't answer it. All right. So NVIDIA, very smart business. If y'all didn't know, Jensen Huang or Jensen Wang, however you say it, he is CEO, but remember, he's also co-founder. So he's been here since the beginning. So he took the Microsoft approach. He saw what companies are doing what well and what companies have enough that if we dump some money into it and say, go this direction, they can do more with more money. So he saw Nokia and pumped money into Nokia. And that's exactly what they're doing. So now they don't own Nokia, but a 3% stake in their company, that's a big investment into their company. I think if NVIDIA says, I think you should do this, they're gonna have some pull, and it's going to be good for Nokia because now they're not a competitor to NVIDIA. NVIDIA is actually an investor in them. And then if you think about it, if they need any chips or anything, NVIDIA might say, well, hey, you need this kind of chip for what you're making. We can actually sell you this chip at a discounted rate because we invest with you. So if they give them a discount for investing in them, they invest in them full price. Nokia's getting a good deal. Everybody wins. Nah, I'm saying. All right. So number 3, fresh leadership and strategic aggression. So their CEO, which I didn't know the CEO's name, but we're gonna look at him. Innovation. That's what we can say. And then geopolitical wins in defense. We're going to skip this one, but I'll leave it up there so you guys can read it. But you can see why Nokia is actually moving. And then the next one we're going to talk about, he wanted us to look at Blackberry. Why invest? If you got something you want, if you have something you want to contribute to Nokia or Blackberry, I don't care if it's charts or whatever, you can throw it in the chat. I'll pull it up. So Blackberry, whew, how the mighty have fallen. Let's go Max first, because this is another one that was huge during that 2000, 2004 era with all the different phone companies out there. And I know I can't think of some providers that have went out of business. There was some other ones, but I mean, I'd be showing my age anyway, because most of y'all, if you're a younger millennial or if you are a Zennial, or Gen Alpha, I doubt this. For the one person that's watching this, that's Gen Alpha, you'll have no idea what I'm talking about, and you'll just see me as old. Mi corazón. 2000 was down. They grew around 04, 05. And look, they grew during the crash. Blackberry. Now, if you didn't know, Blackberry was the Apple of yesteryear in that before all of the smartphones, which the iPhone was created in 07. Look at their stock, right? But before they created that iPhone, Blackberry was the king. Blackberry was king of the mountain. In fact, look, it had a 3-point crown, right? And if you include this, it looks like a split level house, kind of ugly, but it was king of the mountain. And before Apple came along with their iPhones, they were the ones that had the defense contracts. So they were the government. So if you're in the Navy, your commanding officer, your executive officer, your COXO, or your command master chief, they had Blackberries as their command, their bat phones, right? They had their personal phones, but the bat phone for the command, oh, the sailor just got arrested. This one went to the hospital. This one's having this kind of trouble. The big news that had to come to them, or DC just said this, right? That would come to a Blackberry. That is what they had. They had all the defense contracts back in the day. See, again, you can only talk this much about it if you know, if you paid attention. And then what happened? Apple came out with the iPhone and it outpaced Blackberry. Blackberry let that happen. Get a new CEO. Get some vision. Look at what your competitors were doing. Get a smartphone. Look at what it can do and copy allegedly, or, don't obviously impede on trademarks and stuff like that, but copy what they're doing without getting sued, right? Like I said, the Corolla will kind of be shaped like the Civic and whatnot. They all do that. One person does that, the other person does it. Somebody makes a touch screen, everybody's making a touch screen. One person made a keyboard because you had 1, 2, 3, 4, 5, 6, 7, 8, 9, and then you had the 0 down here. They had a keypad. Then somebody came out and made a keyboard, and then everybody made keyboards. So do that, right? There's a shell that you can copy and not be sued. Do that. BlackBerry didn't do that. So now Apple has all the government contracts. All the bat phones are now iPhones. So BlackBerry, that's where they used to be. Now let's look. They went up 18% yesterday. They past week, 0.25%. Why invest? Do you suggest, Bars, that we look at leaps for, and I'm talking like 2-3 years out for BlackBerry and Nextel? What's the last one we just looked at? Nokia. What are your thoughts? Here's the 3-month chart. Here's year to date. 1 year, 5 years looking rough, but everything except 5 years and max. You're unmuted. Are you saying something? I just am looking for, like, if you would suggest from the $8 it's at right now, or from Nokia, what was it, 1545 or something like that, if you would suggest doing leaps right now.
For Nokia, can you hear me?
Yep, sure can.
Okay, so for Nokia, I was about to post a chart in the. I'm about to post it right now. So I have a chart. I just did some quick technicals on it.
Uh-oh. Here we go.
I still have to dive in a little bit deeper to get some technicals, but I'm looking at right now the price that it's at. It has to break through this zone. I'll say $15. What is that?
1572.
We need to break through that zone
Okay.
first, but if we don't get through that, then I'll look for a pullback, and then I would probably any red candle on a daily chart. I will look for a pullback, and then I will hop in some leaps.
So you're saying you wouldn't pull the trigger on a leap right now at $8?
Oh, for BlackBerry, yes, I would hop into leaps for BlackBerry, but for Nokia,
Let me go back to Nokia.
BlackBerry is just getting started, so I would probably if I was to do BlackBerry, I would start off with a small position for leaps, and then if we have a red candle, then I would average down.
So when you say Nokia breakthrough, is that, are we looking at the green or the blue, the 1572 or the 1547?
The 1572.
Okay, that's what I thought. Are you saying it needs to hit that price?
So no, that is a resistance level. If you look to the left where you see there's a bunch of candles
Yeah.
that are like pretty much hitting that line,
Uh-huh.
that's a resistance level. And if you go further to the left, uh, it's a little some consolidation right there also. So I would say it's a zone. It'll start at $15 and probably go up to about $20. If we can get through that level, then this has a lot of room to run. Right now, also the blue circle I put on the
On
chart
the right, yeah.
shows that the 50 EMA is about to cross the 100 EMA. That is another signal that the price is going to continue higher in the long term.
Okay. So in plain speak, for those who are not as savvy with trading as you are, and they're trying to use the charts as an investor, what are you saying you need the price to do in order to, say, pull the trigger on some options?
Um, I would need the price to do so. This is I'm looking at the monthly chart. So
Okay.
right now, Robinhood doesn't really have the best charting. So other platforms have a little bit better charting. So on longer time frames, so daily, weekly, and monthly, they give you a trend of price for a longer term outlook. So meaning, right now I'm looking at the monthly chart. The chart that I sent to you is the monthly chart. Each candle is 1 month.
Oh, I didn't know that. Okay.
So each one of those candles, it took a month to make. And if I go to the weekly candle, the candles will look a little bit different. So
Oh.
right now on the monthly chart, the 50 EMA is crossing the 100. The next stop or the next cross will be the 200. That's it. That is a long term buy signal.
So you
When you
could,
have the
are you saying
when
you
you have
would
the
buy now, or you would do options now, or you need the price to go up or go down to a certain level?
as a long term investor, I mean, you can hop in now and it wouldn't hurt you because this is going to be a long term. If you're going to do leaps a year or two, then it wouldn't hurt you at all.
There we go.
But as
Okay.
a like, if I want to swing trade this, then I would be looking to for a pullback, um, because we're at resistance right now. Probably a pullback to $12,
Ooh, okay.
um, $12 or $13. If we don't get that pullback, then a breakout. I would enter options on a breakout above $15. If we can get above this price and close um, on a daily candle or a weekly candle, then I would be hopping into this.
All right. Thanks for that, my man. Also, oh, since you're mic'd up right now, do you want to cover what Ramza was asking about how leaps are different than futures right now?
So yes, futures and options. So he meant options. You have option leaps, which is a year or more, and then you have futures. So futures, you have a contract, you buy it. If you wait for expiration, then you're obligated to buy to purchase said commodity or at whatever price your contract is at. So say if I was trading gold, and gold right now, I'll say oil. So oil is probably at $94 right now. I don't have the charts up right now. Um, so say if I was trading gold oil and the price is at $94 and it went up to $100 and I held that contract until expiration, I'm obligated. I have to buy those barrels of oil at $100.
Ooh, okay.
Versus options, you have the uh, option to exercise your position at expiration. So you can either buy the shares of whatever company you have an option in. You can buy those 100 shares, or you can just sell the contract to someone else. But futures, the biggest difference, if you're say you're trading, is futures doesn't have time decay. So I can get a futures contract, and if I have a target price on like the NQ, say it's at 29,400, and I say it's going to go to 29,450, and say I have one contract and that's going to pay me probably $1,000. Um, if I do that same thing with options, time decay, how it takes longer. If it takes longer for that to happen on options, I will lose money. Versus with futures, I will always get $1,000 no matter what. It can take 2 years, it can take a month, it can take a week. The price is how much I'm going to make is always going to be the same. So futures is a little bit easier to trade because you don't have to calculate, okay, how long should I get this option contract out and for my target price.
Okay.
But futures, you have to have a little bit more capital to trade. That's why I trade prop firms.
What is that?
So a prop firm is where you have to pretty much take a test in order to trade, and then they pay you once you prove yourself, pretty much.
Your knowledge?
So say again.
Your knowledge level?
Pretty much. So you'll pay. So the prop firm I trade with this week was Tradeify. I paid $50 to do a combine. So it's like the NFL. It's like your tryouts, right? I do a combine. I have to make $3,000, and it can take me whatever how long, but I cannot lose $2,000,
Ah.
and I cannot make $3,000 in one day. Some combines you can, some you can't. But the one I'm with, you have to do it in a minimum 2 days, maximum whatever how long it takes you, a month, 2 months to make $3,000. You just can't lose $2,000 in that time span. I make the $3,000. They move me to a simulated funded account, meaning it's still a combine, but whatever money I make in a 5 day period, I can take out 50% of my account or more.
Whew.
After about 5 payouts and the sim funded account, they move you to a live account, and then they transfer all the money that you've made in your funded account to a live account, and then from there you can take daily payouts.
So
So
he is saying that he is legit.
I mean, for funded, there's a lot of bad things around it. Like people post that they're funded, and it's not easy. It's not easy.
I hear that.
So
But if it were easy, everybody would do it. That's W-2 work. That's why most people do that. You got some questions in the chat. You want to answer those?
okay.
Or did you have more to say? I didn't want to cut you,
So-
but I didn't know if you saw it.
So technically, yes, I'm trading with other people's money. So I only put $50 into the account, or probably like $100, depending on the prop firm that you're going with. It could be more, and then the account size that I have is a 50K account, and you only can lose $2,000 of it before you have to either reset your account, which is going to cost you more money, like another $50 or $100 or whatever the case is, until you pass it. And then once you pass, then you move into the live funded account, or I mean not live funded, but the simulated funded account, and then you're still trading their money. The only money that you've put into the account is either the $50 or $100, depending on the prop firm you decide to go with, and that's the only money that you're using. But you're trading like you have a $50,000 account, because futures, in order to trade NQ, depending on the platform that you use, you have to have a margin of at least like $14,000 or more. And if you want to hold those trades overnight, then you have to have like a margin of like $20,000.
Oh
Also, it
God.
all depends on what you're trading. You're trading gold, you're trading NQ, you're trading oil, you're trading wheat, soybeans, anything like you can trade a lot of things. You can trade the futures market is open 23 hours, um, 6 days a week. So it opens up on Sunday for San Diego time for Pacific time. It is Sunday at 3 p.m. until Friday, 2 p.m.
Okay. My question for you, because he has another question for you, but my question for you before we get there is what's the difference between the futures market and the stuff you can buy or trade there versus the stock market?
So the future market pretty much kind of goes off of the stock market. So I'll be looking at the SPY or NVIDIA to determine, okay, where are we going to go? Are we going to go up? Or are we going to go down? So they're two and two. You can look at the futures market. The future market makes a lot bigger moves versus the SPY or QQQ. So I'll look at NVIDIA. If NVIDIA is going up, that'll tell me that, okay, the SPY is going to go up and NQ or the, the NASDAQ is going to go up.
Okay. Very
So they're,
insightful.
they're, they're, they're connected.
Okay, fair enough. And then his question was, are you an accredited investor?
No, you don't have to be an accredited investor to do futures
I didn't get
props.
that from what you were saying, but I think he just wanted to know. He's pocket watching. He wants to know your net worth. You know what I'm saying?
No, 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 no. I know trading is not easy. I've lost a lot of money, so I know a lot of knowledge. I have a bunch of knowledge I've learned pretty much self-taught myself for the last uh 7 plus years.
Good God.
But I just started futures 2 years ago.
So you mean to tell me that, oh, he wants to know if they certify you in any way. What they do, because he said you have to do the combine. So they certify you in saying that you know what you're doing when you make $3,000 with a minimum of 2 days of trading and a maximum of whatever, but you just can't lose 2,000. If you do that, you make it to step two, where they have the simulated account, but they're kind of funding it. And he said, whatever you make, you can pull 50% of that if you want to. And if you pass that step, then you move to the okay, you have a live account of like $50,000 of other people's money, OPM, and you can't lose $2,000. So that is certifying you to say that you know what you're doing and you are legit. They won't just let anybody play with other people's money. And it's kind of, if you ask me, and I don't know if you would agree to this, Mr. YI, it kind of is asking almost like a hedge fund manager. Like you're investing in other people's money, but they don't want you to lose none of it. So people's investment continues to be positive.
So for them, yes. So because
This
they're
guy.
making, so also when you make money from them, so in a sim funded account, it's a 90-10 split. So you take 10% of whatever. Say you take a payout of $3,000, they'll take 10% of that.
Okay. Oh, they
So you
take
take the rest.
10%. I was like,
Yes.
okay, all right. Well, that's better than what I thought you were saying. I was like, dang, they only give you 10, man. You better be working. But they take 10. I mean, that's hey,
Yeah, there's
I'll take 90
there's
now.
other there's other prop forms that do 80-20, but most do 90-10 because they also make money from you paying for the combine because there's
Ah,
people out there
who
that buy a
fail.
lot of combines also.
Okay.
So they're making
Okay.
money either way.
But the
Yeah,
$50 is like an application fee, right?
pretty much.
Oh,
like
so yeah, it's like
success fee.
like college. Like you don't get the application fee back.
No, yeah.
So they make a lot of money from people applying to colleges. I mean, I'm sure they make a good bit for a lot of people applying, but they're not going to get accepted because they only accept X amount. And so yeah, um, so that's guaranteed money pretty much for them. So I can see that. All right. I guess that's it for that one. And then I
I,
guess,
I got a minor if you got time.
yeah, go ahead.
Hey, when you're looking at going back to the BlackBerry for just a second, those companies, from what I understand, the RSI is kind of like how far stretched inflation is on that stock. And so if the RSI is pretty high near what the calculated maximum is going to be, and the other metrics like the price is going up, but the volume of trading is going down, then there's some metrics that kind of show you might have a pullback coming soon. Can you give a brief of what three things you would be looking for to predict a drop?
So for that, for RSI, so BlackBerry can turn into a meme stock. Stock. So RSI over 70 is overbought. So technically, that's when you would want to get out of any position on usually stocks. But if the stock's been beat down for a long time, if you look at the BlackBerry chart and you pull up I have the weekly up right now for the BlackBerry chart. They had swings from about $4 to $28, and right now, and it didn't have as big news. So right now it's surrounding AI, and they have AI news. So this price can really keep going higher. So RSI, it all depends on the time frame. Looking at daily chart, weekly chart, 12-hour chart, you'll get hints with the candle style. If you have a long wick on your candle at the top, sellers pushing it down, then that is a signal for a reversal and to back into either a support price, or like I like to use the 9 EMA because that is your trend line. So right now, if I look at the daily for BlackBerry, my trend line is at, let's see. So my trend line is at $6.58, and BlackBerry is at $7.91 on TradingView. So if it was to get a pullback, then that will be the price that I will expect it to hit and then bounce.
Okay. Yeah, because that's
Yeah, RSI just tells you, so above 50, RSI just tells you that buyers are in control. As long as volume, if you see green bars, as long as volume is um, either increasing or staying steady, then the price should continue higher. As long as your RSI keeps going up, and then your MACD also is still going up. But once you see a curl in your MACD and a curl in your RSI, and you have a long wicked candle, um, then that will give you signals for reversal. Also, if you look at RSI and not RSI volume, and you see that there's been consistent volume, and then you see a sudden spike in buying volume, that could mean that buyer exhaustion, and then that could be a reversal also.
cool. So that kind of answers where I'm at because from my understanding, like you said, the closer you get to 70, it's like, all right, yeah, we're probably inflated on pricing, but then volume. When it comes to volume, you could see high volume because volume is buying and selling. It's a two-way transaction. It could be a buy and a sell, or a sell and a buy, right? And so if that's the case, if your candle has more wick than wax on it, meaning it's a long wick, and it's at the bottom where the bulk of your buying has been, that could be still high volume, but couldn't that indicate a sell-off?
No, if you have a wick at the bottom of your candle, it means that buyers are in control. So wick at the top of the
No.
candle.
I'm sorry. The other way around, where the skinny part of the candle, the wick is at the top, and the bulk of where your buying was at the bottom, the thick part of
Yes.
the bar of the yeah.
Yes, it can mean that the buying could be over. But you want to look at different time frames when you do that because say you're looking at the 5 minute chart, you can have a wick, a long wick on a 5 minute chart candle. But then if you look at the daily chart, it depends how long you're going to stay into this play. If you're doing long term or if you're swing trading it for a month or two, or if you're just doing a couple days, that's when you break down, okay, am I going to look at the 5 minute chart, the 1 hour chart, or the daily, weekly, 12-hour charts, you have to find out what chart you're looking at. If you're doing long term, then and all your candles are full with no super long wicks at the top, um, then then you have no you should have no worries. As long as
I'm gonna go ahead.
no, you can go, you can go.
I want to do like a presentation, and I want to submit it to you and anyone else who's interested. And I would like for y'all, if you have some time, to kind of tweak it and make sure that it's accurate or peer review it. Because when we do these shows, I want to be able to give people examples and break it down to the smallest molecule, so that when people hear RSI, they understand that it's a calculation of if the stock is inflated as far as too many people, it's overbought. And if we're talking about the EMA, I think it's exponential moving average versus the MACD and all these things that they have meaning, and you need to understand each one. And then we need to practice having people build charts so that they're confident when we're talking about these topics. Because a lot of people keep telling me, I don't know where to get started. And it's like, well, then ask. This is what the show is for. And we've got about 75 people in the group, but at any given time, we might only have about 5 to 10 participants. And I'd like to see that number go higher. And I think that people just haven't taken the time to try to understand it. And with the bit of time they have, they get overwhelmed and then they shut down. And I want to make a way for them to digest quick bits of it, get deeper understanding, and I think you'd be key in that.
Okay. Yes, I'll be able to be able to help with that. Also, like BlackBerry and Nokia, these names are beat down for years. So even though the RSI may be high, these still can run because they've been beat down for 10 years plus.
Yeah, we saw
So
those max charts.
they can keep running. They can. The RSI will probably go to over 100 if
Ooh.
because how long they've been beat down.
Oh man, welcome back. Welcome back. No more going out. All right. We're gonna keep you on short duty for a while. Tell him Blacksmith, tell him. He ain't going nowhere
Yeah,
for a while.
well, you're on short duty for at least what, 3 years?
I'm on CUD right now. I'm not on
Oh, I
deployment
thought
for
you had
until next year, in the next year.
Oh, so you transferred from North Island to Sea Duty.
Yes.
Ah, okay. Oh, because you were at the 22 Squadron before?
Yes.
Ah, okay. Okay, so you transferred to Sea Duty. Got it. Well,
Yeah, your order's about to get back to land duty now. We got some pull now.
this guy said land duty. You see, these darn soldiers, man, they don't know what's up. He understands the concept though. It's all good. Well, thank you for that. The last segment of the show we're gonna end up getting to here is Boxabl. So we're gonna check and see what that Boxabl do. So I've got this from Ramza, and it's just saying that the merger's still on track, basically. FGMC is still being traded right now on the Nasdaq. We went over that before. Most major development: the SEC declared the registration effective, and the shareholders meeting is scheduled on June 9th, 26. So happy birthday to me. Happy 40th. And that's one of the big concrete milestones so far. Okay, so same kind of news. Still $10, still 3.5 billion evaluation. And they're saying no validated Tesla partnership, but some news was out about that. So something I think got leaked and then they tried to pull it back, but it was something about them doing lounges for their larger charging stations that Alpha Delta had posted in the investing chat, which got everybody talking about it. Actually, I got pretty excited about it because listen, Tesla has been a great company, which is why it's in the Mag 7. And if that's going to invest into Boxabl, oh, please listen. It's a small deal, not a big merger or partnership. People said it was over exaggerated. Okay, fair enough. But either way, I'm still excited about it one way or another. Small, big, I don't care. Add Tesla to in parentheses next to Boxabl, and that valuation, that price shoots up. All right. Let's see. They continue pushing the Casita, Baby Box, and future connectable townhome style modular homes as it's scaling. So, yes. Now, this one I want to talk about a little bit. So, the Casita is their flagship product, right? The Casita can come into it can come in a studio, a one bedroom, or in California, I believe is specifically just that one, two bedroom. So California can get all three, but everybody else I think can only do a studio and one bedroom. The Baby Box is actually classified as a mobile home and it's only 20 grand. The Casita runs for 60. And that's the studio and one bedroom. I don't know about the two bedroom. It might be a little more. If you get any, I don't think you can put another bedroom in there without increasing the square footage from like 361, I think it is. The Baby Box, I think, is 291, and it's classified as a mobile home because it has wheels on the side. You can pull it. So if you wanted to, this is something that you could take glamping or glamour camping. It's probably more comfortable than a tent. Just saying. Know what I'm saying? So in future connectable townhome style modular units, I did hear that they were working on being able to rack and stack Boxabl units. Um, my sons are outside doing kid stuff. So that was him. That was my 7-year-old. You hear screaming, ow. Did it tickle? Is you okay? Okay. He understands improper grammar as well. All right, so I was gonna see if it had the. So that's the Casita. Where is? Yeah, so we looked at this last week. It does say 1, 2. Okay, this is what I was kind of looking at. If this is a Boxable, I'm all in. Oh, see, developers. So look, they're looking at buying or building, I should say. Oh, that's kind of sweet. This patio area right here. That's kind of sweet. They're looking at developing Boxable tiny home communities. Look at that. Look, folks, I said it once. I've said it many times actually, but I'll say it again just for the people in the back that might not be paying attention. My voice carries, so I know you heard me if I said it. But I will tell you this: sight is great. It helps you get around. It helps you cross the street without getting run over. It helps you get to work. But vision is better. Sight, see, and I said it like this to somebody at work last week. Sight takes something. This is my wallet. There are many like it, but this one is mine. It takes this wallet and says, this is what this wallet is. 80% of my focus is on what the wallet is, right? 20%, maybe it could be fatter, maybe it could be taller, maybe it could be made out of something different, but 80% focuses on what this structurally is, right? Now, sight, that's sight. Now, vision comes in and says, yeah, it's a wallet, 20%, but 80%, you know what? Let me focus on what it could be. This could be made out of titanium. It could, instead of having this folding aspect, this trifold, it could just be straight up and down, and you could just put cards in it. It could go in your breast pocket instead of going in your back pocket. What if, with where technology is going, why don't we put this wallet inside of this flat screen TV that's capable of making phone calls, that's really a supercomputer, and just make it electronic so you can access your cards through there? So your flat screen TV becomes your new wallet. Hence Apple Pay and Samsung Pay. Just saying. Not saying. So that's vision. So when you use your sight on this baby box, it says from military to workforce, the homeless and FEMA. Remember when I covered that Boxabl call with the CFO, the guy who had been, I forget his name, but he had been the CFO for Caterpillar as well, right? I'm pretty sure it was Caterpillar. And I said, wouldn't this be awesome if they could partner with local governments, cities, towns, counties, and put the homeless in these small boxes? Wouldn't that be better than living in tents on the street? And they could subsidize this so they would buy from Boxabl with government money and put these homeless folks in something better than living on the street in sleeping bags and stuff like that. And now look, the homeless, it's up here. I'm just saying, vision's better. And you know what? If they start doing that, I'm putting homeless in these by my investment in the Boxabl. Look, you can't change the world on your own. You're not Superman, but your dollar can go further than you can. It can go places you can't. You said, what about Washington State and California? What did I say about Washington State? What you talking about? What you talking about, Willis? The price of leaps. Oh, Nokia, a $12 call. Oh, look at that. Look at that. $670 it will cost you for one contract. That is what I'm talking about. And what's the expiration? Oh, you get a year and a half on this. Okay. Whoo! That is what I'm talking about. Oh, is this one you currently have? This is one you currently have. That's one you currently have. So I said, what about Washington State and California? You're saying that's the states I said? It was $60. Yeah, I see that. Fire. Fire. All right, folks, that is going to be the show for today. I actually am over. I'm almost at an hour and a half. You do not have it just on your watch list. Alpha Delta, I know you're probably already up on this, but we covered a segment about Nokia and Blackberry. And Blackberry right now is at $8 even. I'm sure you probably looked at their chart. If not, you should take a look at that. If I still have it pulled up, I'll show it. No, I have Nokia. But I think you were on to this Nokia as well. And Nokia has ballooned. Why Invest's analysis, Why Invests, is that correct? Why Invests is too much in that. You just got to snake it, roll it. Anyway, his analysis was that both of them are fine right now to do leaps on. And I don't know if you've run any other analysis on it. No, Blackberry. Let's go. So I don't know if you've talked to me about BlackBerry. I don't think so, but I know we've talked about Nokia, but it was a long time ago. I mean, the 5 year and the max charts on both of these companies are going to be absolutely horrendous. You'd be abhorred. But again, he was saying that they're great to put leaps on right now. But folks, that is the show. I do have to run. I have another kid's bicycle to put inner tubes into, new inner tubes, and bump them up. And then I've got my own motorcycle. I've got a spray cleaner on, scrub down, and relubricate. And that's all I got. And wipe down the bike. That's all I've got to do for that. Um, my son's girlfriend just graduated from Mater Day. It's a private high school, Catholic school over in East Lake. She graduated yesterday, so we're gonna do a grill out and jamboree for her. And Yeah, I got some kids to go beat down lovingly. They love the rough house. These two little boys. I don't see them outside right now, but you got to give them those loving drop kicks. That's how they process love from daddy. Now they know I do this channel, and actually, if you look at some of the shorts, you will see I said it was great content, and then you hear great content. And if you agree, hit a like, share, subscribe for Trey and me, because Trey wanted to be in some of the videos. So the wife had a birthday on the 6th. My birthday's on the 9th next month. And so we got some stuff to run and do. You've been studying on Nokia, hadn't gotten into anything on Blackberry yet. You'll watch back the first half of the video. Yeah, I'm going to upload it as soon as we're done here. And yeah, thank you, Sanchez, as always. You get 100 and a fire. I'll just give him 100 because he says, Sanchez, he's innocent. I'm going to give him the head explode because he knows he's not. Anyway, see this guy's criminal, I tell you. Lovingly criminal.
What did he say?
This guy. All right, folks, the forge is going cold. I appreciate you. I love you. I will see you back here next Saturday, 10 o'clock Pacific Standard Time. And we will have more subjects for you. What I'm trying to do is keep a template for the show. And the template is going to be pretty much a health tip of the week, an investing tip of the week, market movers, financial reactions, and then we'll go from there. So I don't think we did an investing tip of the week. Just so I keep that framework, I'm going to use the same one I used last week. I'm allowed to do that because it's my show. The investing tip of 2 weeks is dollar cost average always, DCA always, and save what did I say? Save a stash for the crash. Dollar cost always, but save a stash for the crash. What does that look like? Okay, so we know that RVI, I'm going to go back to it. Robinhood owns this, but it is a separate index. So investing into Robinhood is not an investment into RVI. I looked that up because it's a separate index fund from Robinhood Markets, albeit Robinhood Markets owns it. It ultimately owns it because it created it. That's why it's Robinhood Ventures Fund I index, right? So what that could look like is, where is it? Here we go. Look, a $10 investment every week. A $10 investment every week into RVI right now would mean that every 6 weeks, I buy another share, right? Another whole share. That's dollar cost averaging, right? Now, while it's slow like this, if you could afford $30, now my money's moving all over the place. I have this home that I'm investing in at quite a precipitous rate every month, called a mortgage, comes from mortuary. But anyway, so I have a home and I'm building equity in that while bringing the price owed down every single month. But Lord have mercy, it's taken a lot out of me. But then, there's the stock market portfolio, there's the Boxabl investment. There's also my investment. If you guys remember, I think I told you I got into Game Flip on Start Engine. So there's another pre-IPO company I got into, Start Engine. I will tell you, it is just like RVI here. It's running a gambit on these private companies. Kevin O'Leary, Mr. Shark Tank himself, Mr. Wonderful, is partnered with them. I don't know if he's CEO, but he is definitely partnered with them. If you want to look up some pre-IPO companies, go on there. You can find a lot of good ones. But we're going to deal with Robinhood or RVI because they're going to be sponsoring this show. It ain't allegedly. They will. They said no last year. I'm not even mad at them because in the words of Tupac, I ain't mad at you. I was too new. I'm not new no more. I'm not new no more. I'm a journeyman. Okay, so RVI. So if you cost average into this, it could look like $10 a week. Every 6 weeks, if it stays roughly about the same, you buy another share. Now, if it came back down, let's go year to date because it just IPO'd in March. If it came back down to about, let's say $23, now, if you had a stash or $2,400 tucked away, right? That's saving a stash for the crash. So if it dropped to $23, that would be a little above what it IPO'd at, 22. I would then, it's a crash, I would then put that stash on it. So $2,400 would buy you about 100 shares right here. That's how you do that. Dollar cost out always, but save a stash for the crash. That can be anytime I need a default investing tip of the week because I failed to plan ahead of time, I'm using that. That is a Blacksmith original. All right. Any of y'all in Discord can utilize that, by the way, because y'all are Blacksmith Podcast server alumni. Love y'all. See y'all next week. And same bat time, same bat channel. We will be back. Sorry I couldn't get to the rest of these in the chat, but if you want, just post it in the investing chat and we will get to it there. All right, y'all. I will see y'all. The Blacksmith out.